Futures point to a lower open following Wednesday's broad-based sell-off as investors participated in profit-taking and European debt concerns resurfaced. It's a light day for economic data and earnings with just jobless claims and the Challenger report on tap. I'm Jill Malandrino, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Jill Malandrino with theStreet, and together we bring you the morning call. Even though it's Thursday, it's really Friday for us because tomorrow we are closed for a market holiday. Let's not forget that, folks. But we have to review what happened this week, as there's been some interesting action. We haven't seen this type of pullback in a while, Scott.
Yeah, we finally have the pullback that everyone's been talking about or everyone's been saying, but people have been saying it for like 7-8 weeks. So finally it's on us, and the question is, what type of correction will we see? We started talking last week about connecting the dots. Last week we saw a few distribution days, a little faulty action, and that's when IBD put us in rally under pressure, which to me is get your foot off the throttle and be more in wait and see mode. So we also came into the second quarter not exactly knowing what to expect. Do we have the same type of action in the first quarter? And obviously, you can't expect the same type of action considering the type of move we had to the upside. So we were figuring, do we get digestion or do we get corrective type action? As of now, it seems a bit more corrective.
Well, I think a lot of traders are in wait and see mode because we have earnings coming up and they haven't been that bad for Q1. Economic data domestically is improving, so I think it's always healthy to take a step back from the machines. You don't have to trade for the sake of trading, and try and digest and see what the market composure is like. So that's set, Scott. How are we setting our trading plan up today going into this long weekend?
Well, first, I think you touched on a very important topic about earnings season. I think it's good that we're pulling back in front of earnings season, so this way we're not priced for perfection and then just sell any kind of good news. So by coming in, it could be a bit more stock specific, so that's very good for traders. As far as the chart of the S&P today, if you look at these trend lines we've spoken about, it's very important. So if you go to the chart of the S&P, you will see here's the intermediate trend that I always talk about. I always want everyone to see and watch, and here it is, not been tested. So macro investors, it's still intact. But then there are two other trends, so you have to know your time frame. Here's the intermediate trend. Okay, this is the one that we've been following obviously since December 20th. It got tested once right here at 1340, and we rallied off it to make new highs, and now we're coming into it right again. You know, obviously we broke this momentum trend, which guys like me got rid of a lot of positions when we broke this, but right now I would say on this down open, I'm going to be covering my spiders. I have about 25% of my short left on, and I'm going to see if we can get some type of cute bounce into the holiday shortened week because of the jobs number tomorrow, but I'm not putting macro trades or swing trades on yet because I think this could be the start of what could be a bit more of a corrective phase.
I think it's appropriate that we're going to look at the high beta tech names today for the sector spotlight because tech has really led in some true support to the market. Not just Apple, there's been a lot of other names that have performed really well, that are real cheap, paying some dividends, announcing some buybacks. So let's review the cues before we get into our names today.
Okay, the cues I think is a good thing to start with because this is where the leadership's been. So if you look here, you will see yesterday it violated a certain area, which is the upper floor. But again, look at the move that the tech has had. So based on your time frame, it doesn't really matter. This is when it broke out starting 2012, and it's had a really nice uptrend. So here is that outside day we talked about and off the charts. I said this was an area to sell some. Always clean up when you see you can't make new highs for momentum. And now we're coming into what is the trend line. Okay, we broke this mini floor. I would say that this area is something to trade against today, but I do think overall we're going to get a test of this line here, which is around 66.46. And if this correction goes a bit deeper, we might even get down to this 50-day that'll move up. So at that particular point, I do think that this level right around here will be very compelling and very buyable if we see that.
Moving along to Apple, we have two brokers out there now with 1,000+ price targets, seeing this company go to $1 trillion market cap. There's only one broker out there, I believe it's over at BGC, that's saying, look, this company's a little bit overvalued. Scott, I don't know, I still think there's a little bit of room to run with this name.
Yeah, well, this has been something to watch for complexion. And yesterday, you know, it went below that 621, 622 support. That's when the market started to fall apart. But you know what? We traded back above the previous low for traders that got long. And then today we'll see if it could bounce a little bit to help lead the market off these oversold levels. So if you look here at the chart, you will see that, you know, yesterday we traded briefly below this 622.50, which some guys made some money short. Okay, we also pierced this upper level here of 621.45. That's why I created this as your line in the sand for Apple. But you know what? It went below it, and it couldn't close below it, so it still looks fine. So I went long a little bit overnight. I'm going to stay with it. If it can get above 625, perhaps it'll lead a bit more of an energetic bounce in the Qs. But if we trade back below this low here, I would get out of the way, because then we could see a nice test of this 10-day moving average, which is now at around 614. And this is your major support, where it's held many times in the month of March.
Moving along to SanDisk. This was one of those names that really led the market down in terms of what tech did yesterday. Scott, I know it's not your most favorite name to trade. Bernstein coming out this morning reiterating their outperform on 2012-2013 story. The stock's still real cheap, but we are traders by design, and we need to know how to trade this today.
Yeah, well, this stock always gets me. Sometimes you just have a devil stock that always gets you. And even this one, before it pre-announced, it actually showed relative strength on Tuesday. So some traders probably took it home long thinking that they're safe, and then pow. Look at the chart here. Very big hole. I don't care what Bernstein says. This is going to take a lot of time and a lot of, repairing to do. So, if you want to take a quick look here, because traders who know this name know what I'm talking about. This little green day when we closed in the highs, when the market was on the lows, people are like, oh, maybe SanDisk is back in shape. You know what? Look at that. Okay, so now this is, if you're looking to trade it and you're not caught in this mess, you obviously have to watch yesterday's low. Let me give you more of a macro look here. I personally think it's an avoid. If you're a fund, maybe you start accumulating it. But as a trader, if it starts getting below yesterday's low, it could see some more downside action. Obviously, it's had a big move from this area. So let it range out. And there is a small chance if it goes sideways, we can catch a Q trade if it gets above yesterday's high. Let me get the quote chart on here. So for cash flow, if it were to get above this area, this high here is 45.93. It could start to fill the gap. Maybe it's old news, but for me, look at this gap down, filled it. Gap down. I'm avoiding this piece of, what.
It's funny because we started trading SanDisk when we were calling them quotrons. Moving along to RIM very quickly, just want to take a look at this one. There's been some takeover chatter. There's been some private equity talk around the name. I really don't think it's going anywhere, but what are you seeing on the charts?
I see disaster.
Right.
I see every sale is a good sale, and everyone's like, oh, it's going to get taken over. Every time I see the chatter of a takeover, sometimes you can make a little cute money, but you've made more money shorting it. And if you look here at the chart of RIM, I'm sorry, even if when I see people with their BlackBerry on the subway, I'm like, what are you still doing with that thing? What are you doing with that, Jill? Come on. Anyway, at this particular point, it's near the low here. This low here is 1245, so maybe it sees a bit of a bounce. It just came in from 14. But I tell everyone, remember, Palm. Palm got taken over when it was $4 to $6. So if you're playing this just for a takeover target, I think you're doing yourself an injustice. Maybe next time it breaks 10 and accelerates, that'll be an area that, might bring in some bidders.
Yeah, there's definitely more constructive names than that one. Let's take a look at Amazon. We've been really active trading this one on options profits this week.
Yeah, Amazon, also another disaster type stock, no continuity. We had a nice trade when it went above that 186, 187, and it went to resistance, so actually it provided some opportunity, but since then came all the way back. If you look at the chart here, you will see that here's, this actually shows you how you could trade stocks, okay? This was on the Twitter sphere, we were talking about 186, 187. This was a nice little breakout. It flagged, didn't pull in, gave you another move into resistance. This is the line that we actually drew that day. Since then, it came all the way back and now retested this flag. So I guess for a trade, you could trade it long versus the low here of 192.36, because of the pullback. But overall, I think this macro pattern is still bearish. It's still well below the highs. It's acting a little bit better, but the PE is rich. And I think of all high beta names, this one could be in trouble going into earnings season.
All right, and let's wrap this one up with Netflix.
Netflix, the day the market was weak and the day it was downgraded after a move from 123 down to 113, it was buyable. So with this down open, maybe it's trying to grab support. It probably shouldn't have pulled back as much as it did. So if you look here at the chart, you will see there is a small little area to trade it against. Ever since, the big move early on in the year and this topping tail, it's just been a trade since. Right. So at this particular point, it actually doesn't even look that exciting to me as I look at the chart here. Here was that move from 111 to as high as 123. Then once it broke this mini range, it was downside action. So you could pick and choose which way you want to go. I guess if it gets above 112.55 today, maybe you get a Q trade back to 116.
It's really interesting. This is the first time that we've spoken about high beta tech, and it's been kind of like, there's sort of a trade in between, which is really unusual for this particular group. We're going to go into a quick commercial, and when we come back, we dive into the trenches.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Welcome back to the morning call. We're going to jump into the trenches with my 2012 sector pick, the ag space. Kind of like the high beta tech names, there really is not much going on this week. I think a lot of traders are taking a step back and looking to see what the tape is going to do going into earnings. We're going to kick it off with Monsanto. They had earnings yesterday, blew away the numbers, showing 22% on their earnings number, and I think it's showing how the fundamentals for the back half are slowly starting to improve.
Well, I think yesterday was somewhat important and not big of a deal. Everyone's like, oh, they sold those great numbers. Right. It means the ags are still for sale. But yesterday, the market was under a lot of pressure. Right. So listening to you read through the report, it sounds positive. The question is, when is the street going to start looking positive on this group? Because as of right now, they're still not all acting great. Some are better than others. If you look here at Monsanto, you will see it still looks okay. Obviously, the market doesn't know if anything could break out yet. So if you look where Monsanto is, it's really close to those highs. So the market's like, okay, we're not letting stocks go to new highs yet. We don't know how, what type of correction we're in here. So at this point, I think, from a trader's end, as long as it could stay above 79.90 and go sideways, I think it's constructive. On a macro end, you want to make sure it holds above this trend line here, the 76.50, and then at some point, market gets better and the ag story gets better. You'll know because this Monsanto will be breaking above 84. For now, I'm going to avoid it though.
Once we get through that April and May tricky weather season, I can guarantee you we'll be coming back here beginning of Q3, hopefully looking at those lines going through resistance. Let's move on to CF. This has been a great name that you guys traded through 2011.
Yeah, and this one is showing some leadership. So this one interests me. But at this particular point, again, the market's not ready for any type of breakouts. But if it does, then perhaps it could help lead the group. And if you look here at CF, the other day I tried trading it and I lost money. I was trying to break it. I was going to break it out. I'm not that strong. But anyway, it looked like it was going to get through this 191 and it couldn't. It did close green yesterday, so it showed a little relative strength and a negative tape. It will be on my radar today. If it could start getting above this 190, 191, I'll probably trade this today for cash flow. That's if they let anything start breaking out to the upside.
Moving along to AGU. We can actually talk about AGU and Mosaic together. Mosaic happens to be my 2012 stock pick. Again, nothing's changed fundamentally since last week. I just think that a lot of these names were taken down because of the overall market action yesterday.
Well, AGU, it's really a tale of two tapes on this one. AGU looks good. It's at the top end of the range. It was green yesterday. You can look at the chart. This is something that would interest me as a trader. So if you take a quick look here at the chart of AGU, you will see that it's in this upper flag. It's not looking so great, but it looks a little bit better. Okay, here's that resistance area. This is your line of support here. The support here right now is about 85.47, going sideways. So as a trader, this could be on your radar for a move above 90. As far as Mosaic, I would just say stay in tier 1, and really that's it, because at this point it's really not showing you anything yet. It's breaking below this channel. Some guys are actually a little shorted. Hopefully they get their Tootsie squeeze because Joe likes this, and at the end of the year it's probably going to squeeze a lot higher. Here's your resistance at 60. Here's your support. If you're not involved in this stock, perhaps if we do see market weakness and it comes in, you could be a buyer of this a little bit closer to 50 for that second half of the year move.
Right. I mean, these names are just so cheap, but again, fundamentally we like this, but we are traders by design and we really have to respect the charts right now. Let's round it out with Potash, POT.
This is another one. A few days ago, I got a little excited about these names, and I tried to buy this for a breakout, and it got me. Doesn't mean that it can't go at any time, but it's not ready yet. And if you look here at POT, you will see by the chart, I was drawing this the other day, and I still have the line here, and obviously on this day, it did not break out. It came right back in. But, I guess what's actually interesting to look at here is, if you look at this channel, here's the low end, here's the high end, it is holding in the upper end. So it is showing you some strength while the market's pulling back. For me, I'm going to avoid it. I'm going to wait for confirmation for a move above this 48 to 49 for that type of trade for investors. Be in tier 1. If it breaks this area, though, you know that it could come into this 42, so know your levels.
All right, we're going to move into quick hits for some quick cash, and we have a mixed bag for you today. We're going to kick it off with a healthcare name, and I'm sure you guys are going to hear more from Scott and I with this as we're going to the election year and also with Obamacare. But let's kick it off with Express Scripts.
All right, ESRX, a name that I actually haven't looked at in a while. Let's take a quick look at the chart. It does look a little bit better. You had a nice little healthy breakout right around here. It's holding higher. I think if it gets above this little zone, what is that zone? That zone looks to me to be about 57.70. It gets above there, you could trade it for cash flow. As an investor, I would just stay the course.
Moving along to Gap, we've seen a lot of analyst upgrades in this name over the course of this week. I don't know if it's just because it's been such a loser over the past few years. I still think the product mix is horrible, but it is what it is. Maybe the analysts see something that we don't, and the chart certainly confirms that there's been some support there.
Yeah, this is above moving average. It's at the high end. It's been a chosen one. A lot of people don't understand what the analysts say sometimes, but the chart is actually confirming it. If you look here, you will see even yesterday it was green. while the market was red. It captured its 10 and 20 day again. I think momentum comes in if it can clear this 27 area. So look at this little box formation. If the market, if this starts breaking above 27, they let some stocks like this make new highs, it's going to be very hard to get a very deep correction in the overall market. So watch the health of some of these stronger names if they're allowed to break out and they don't use that breakout as distribution, because sometimes in a bearish corrective type tape, they'll let them break out, but then they'll close back below the breakout levels and they'll use it for distribution versus clean breakouts, and that gives you hints of composure.
Moving along to AIG, I never thought we'd talk about this name on the morning call. Stephanie and Jim started buying it last week, which was a fantastic call on their part. Again, a lot of analysts coming up with reiterating their outperforms and even taking the name up. Bernstein this morning saying that they expect the restructuring to be completed. They're about the 8th, 9th inning. They don't expect them to owe any money to the government. So that's really a great sign for this stock.
Yeah, and it's been acting much better. I think about a month and a half ago, it ignited above the 200-day, above the pennant, and I actually tweeted about it and I blogged about it, and people, abused me with emails back. Oh, AIG, piece of junk, blah, blah, blah. Anyway, if you look back at the chart, this was very timely. This was your breakout move, so I don't care what name it was. This was a nice breakout. It held, went sideways, then continued, made a high, pulled back, and now looks good. And I think they had a great buy in here. At this point, I wouldn't be chasing to buy AIG after a move into the highs. It's still AIG,
Right.
But if you go to the weekly chart to see where the next resistance is, wow, it's been in this range for a long time, so you can't even see that there. So anyway, here you go. I would say the next resistance or a possible target for this year, there's no reason why this can't get back to 40, which is a decent amount of money. And if you look right here, short term, there's a little spot right around this 35. So overall, this is your zone where it can get to. This was your buy, and now you're getting paid.
I think AIG is one of those names, almost like an Apple, but to the other side of the tape, where you just get so emotionally involved and they just don't love AIG just because of what's happened with it since 2008. Moving along to Ford, this one's acted really well. They just took up guidance yesterday.
I would say acting really well is definitely a rambunctious statement for Ford, because it rarely does anything. And I've been trying to be long. What I did is I pulled back and I'm like, what names have decent setups that I can go with? I'm not usually in, and that was Ford. Coming into that auto data, I was long probably tier 3, and then GM disappointed, and then Toyota disappointed, and Ford tried to be strong, so I guess it wasn't ready yet. You look here at the stock, it's still in this channel, so it's still acting pretty healthy. It's just not ready to go yet. See this tail day into resistance? That's me buying in there, thinking it's going to break out, and obviously, I didn't get anywhere. So overall, it's still in here. I would say stay in tier 1. At some point, this I think is the class of that group. It gets above 13, and then you get a bigger move later this year, but obviously it's not ready yet.
Right. Again, like we were saying with tech and with the ags, it's really a wait and see market right now as people just kind of digest this week and see how we look going into Q2. We're going to round out the call with Coca-Cola. When I first took a look at this name, my first question was, what about input costs? It's really a concern of mine, but I think it's best house on a bad block versus a Pepsi, for example.
Yeah, and this one had a big move, and it broke out, and it's been a great investment for those trying to hold some stocks longer term as a trade. Sometimes, obviously, we don't turn to Coke for action. If you go here, I just turn to it for sugar and caffeine when I need to drive a long distance. Anyway, here it is. When it broke above 72, that was kind of exciting, and now you've had a little bit of a pullback, so I guess buying the pullback is better in these type of names. Here's your upper flag. I think as long as it stays above this moving average, you're going to see high-level momentum. So 72.85 would be a level if you wanted to buy the dip. If it can go sideways in here, at some point it breaks above 74, and you get actually some Coca-Cola momentum at some point when the market gets acting a little bit better.
There you go. Hopefully you'll get that caffeine jolt. Well, that's what we have for everyone today. These are the kinds of days, even though it's going to be a little bit more quiet because everyone's on vacation, we're looking at consolidation and digestion. That's why you need to go to the charts when Scott and the team wrap it up every day. This is where you learn what the market is confirming. So I think it's a really great job that you guys do with that. Catch it on Options Profits, Real Money, and of course, T3Live.com. Have a great weekend, everyone.